Welcome back, everyone. I hope we are all doing fine and well today. So, yes, it's another video where I'll be discussing my open positions, my closed one. Last week was a very, very dramatic week for me. I took some losses on the yen pairs. I was holding the US dollar JPY, the Nzdjpy, and I think pound yen also. I kind of entered very early. Well, I was holding few. Okay, I'm still holding dollar. I'm still holding pound yen and Kiwi yen, but the dollar yen I actually got caught out of loss at that one, so that was fair enough. And yes, we're going to talk about the economic heat map. We're going to talk about the COT data, the economic heat map, and then foreign scanner. And then we're going to talk about the economic calendar. And then we jump into the normal trade setup. And then that's how the show is going to go today. So without further ado, let's get straight into the video properly. Today we're going to be starting with the COT data. Okay, as usual. We're starting with the net positioning right here. As you can see, the COT net positioning indicate that both card, Swiss, Aussie, and Kiwi are now being heavily shorted. Are still being heavily shorted. This is still the same thing that we saw last week, and everything still remains the same, in my opinion. Nothing has really changed yet. Nothing has really changed yet. And then, as you can see right here, South African rounds, gold, silver, and yen, they're still being heavily bought. And yeah, additionally, we have US oil, we have Dow Jones, and then yeah, literally, we have oil, Dow, South African rounds, gold, silver, and Japanese yen, which is generally being bought by the institution. Yes, I actually removed US oil from my top setup, so let me quickly add it to it. So the 6, we have US oil. So it's going to be part of my trade recommendation as we move forward today. Okay, so without further ado, let's just jump straight into the rest of the whole thing. So let's talk about oil first. Okay, these are the current additional position of by the Fed, by the institution. You can see they opened both long and short at the same time, and that's quite fair. All right, that means they're not virgin just yet, but their long contract is much more bigger, or it's much more than the short contract, which is fair enough. Swiss also still have more short being added to the whole thing. Japanese yen, we have more short contract being added as well. As you can see right here, you can see the proportion right here. We have more short being added. That's fair enough. Let's check the United States dollar. Why is USD? This USD, both long and short contract was added last week Friday. Fair enough. What else? Let's check gold. Okay, so they're closing their long and short as well, but the short contract that was closed is way bigger than the long contract, which is something significant. I don't really have any setup on gold right now. Neither am I buying nor am I selling. I'm just staying quite distant away from it now. So let's see. Which other one? Let's check New Zealand dollar. You can see right here the institution closed their long contract on Kiwi and they opened few short contract. Fair enough. Still staying. The net short is still around 77%. Just still very good. All right. What other one? Bitcoin, is Bitcoin worth looking into? Yeah, I think we this last week we've seen some very heavy drop in the price of Bitcoin. Okay, there was a spike very early last week, but towards the end of the week on Friday we saw a very serious dump, and today now we're seeing another dump. I'm gonna probably branch Bitcoin as time goes on later in the video. All right, but we're seeing some very good retracement per se, because until Bitcoin actually crossed below that 100K region, that's the only time I can start saying maybe we're gonna get a pullback to around 89K region potentially. Okay, that 92,000 to 89K. All right, that's the pullback region for me before we can look for further buy in the price of Bitcoin. But for now, when we get there, we're gonna look into it together. And lastly, let's take a look at pound. Right here we have pound hovering both long and short contract. So we have some long contracts we close, and then few short contracts we open. And it's still averagely the same in my personal opinion. We have 57.88% long contract and 42.12% short contract for the pound. Still fair enough, still looks good. Everything is still pretty interesting in my personal opinion as far as the pound is concerned. All right, so we just have to wait now to see how that goes. I think that's more like it. Let's check euro. What's happening to euro? Euro right here, we have some long contracts was also closed, and we have a bunch of short contracts that are open. All right, still put the whole thing, the net position at 60 to 40 approximately. Okay, 60 to 40% approximately, which is still fair enough. All right, but we shall see. I don't really have anything serious on euro this week. I do have some trade on euro Gbpjpy, and I'm looking to short euro NZD as well. But for now, I'm still like on average kind of like bearish on euro in general. All right, so that's that on the COT data. You can actually take a look at this yourself and just to prepare yourself very well for the coming week, in my opinion. All right. Well, after that, let's take a look at the economic heat map surprise. Okay. So this is the economic meter surprise designed by Edgefinder, which is actually a very good thing. So far, I've been taking a look at this and it actually makes absolute sense. Instead of going through the economic hitman one by one, which actually takes a lot of time to talk about, we can just spend a couple of minutes on the, on the economic surprise meter, and it will show us the broad overview of what the economy is all about. All right. So first off, we have 46% United States dollar strength. Okay. I'm not going to call this strength for now, but we have 46%. It is still much better than 17% weakness in the European Union. All right. This is a ton of weakness, and this can also be attached to the fact that there's a little bit of an escalation between the EU and Trump. Let's just say Trump, because that's literally not US thing. The EU and US tariff saga. Okay, something is looming up. No one would have actually imagined that it is the whole deal, the whole fight is going to get prolonged. The tariff war, let me just put it this way, the tariff war between US and China and EU and US will be longer than the one of US and China. I don't know if you understand what I'm saying. I mean, I would have assumed that US and China would take a long time before they can come to an agreement compared to EU and United States. But right now, there was a little bit of a spark, okay, or let's say a spark during last week. I think last week Thursday or Friday, when there was an escalation like 50%. Like Trump said, it's gonna go up to like 50% tariff on EU if they don't know what they're doing. Literally, that's just to paraphrase. Okay, that's not what he said exactly. And that literally just tanked the whole of Euro downward a little bit, because sometimes ago last week I was seeing around, I think, 51% strength, and then we just saw this actually drop down. So we're going to take a look at the EU economic heat map per se. But right now we have dollar measly neutral per se. Pound is too strong. Okay, we have a very weak euro. We have a weak yen also. We have a very strong Kiwi. We have an average neutral Canadian dollar. We have a moderately strong Aussie, and we have an average Swede as well. So this week, one of my top setup, as written right here, you can see on my hand, I have pound CHF, Gbpjpy CHF. Okay, as one of my top setup. I also have pound Aussie, Gbpjpy AUD. Okay. Yeah, which other one? I have dollar yen, UJ. I have Kiwi yen, Nzdjpy, as one of my top setup. Okay, and trade recommendation per se. I have US30, and then I have US oil. Okay, so these are my trade recommendation for you. So if you're watching this video, I would advise you to stay to the end of the video. All right, so that's that. And as you can see right here, I want to buy Kiwi, I want to sell yen, I want to buy pounds, I want to sell yen. I'm currently selling euro while I'm buying pound. That's the euro GBP trade I'm holding right now, and that is more like it. Also, I want to buy pound and short Aussie in a way, even though Aussie is immensely strong. But when we get there, we're going to talk about that. At the same time, I want to buy another pound. Okay, I'm buying pounds again, and I'm shorting Swede. Also, might be something very cool to look into. But when we get to the chart, we're going to talk in details about all of that. So let's take a look at the Euro economic heat map, the EU economic heat map right here. So what do we have on the Euro economic heat map? First off, we have the quarterly GDP, I believe, right at the top here, the GDP quarterly, which fell shorter than what was being forecasted. The market was expecting 0.4%, all the way from 0.2%. But we got a missed by the data was missed by 0.1%, which kind of like indicate that there is a little bit of contrast in the EU economy so far so good, in the EU GDP growth. All right. Also, both manufacturing and service PMI also seems to be contrasting. So generally, the economy, the business part of the economy when it comes to the EU economy is not booming. Okay, the service PMI is dropping, manufacturing PMI is dropping, and the GDP growth is also dropping. That is not good. Okay, so that's number one. As far as the inflation rate is concerned, as far as the inflation rate goes, I think the EU they've got it on lock. All right, I'm gonna give them that, because although the retail sales is slowing down, which is not very good. All right, it's slowing down gradually. It's not very good. However, inflation is on lock. The target was 2% by ECB, and right now they are at 2.2%, which is very close. All right, which is very close to the target. Okay, very very close to the target. So that way, I'm going to give them that. However, the job data is not looking very good. The labor data per se, unemployment rate came quite higher than expected, and the employment change also came quite high. And I think they only added 200 new jobs. 200, just 200. 0.2k is 200 new job. Okay, it's not up to 1,000. That means 0.2 is 200. So that is not good. We have economy that is reducing on the business side. Inflation is also reducing, which is good for the economy but not good for the currency. And then we have the job data. The labor market is also contrasting. Okay, it's getting crazier in EU, and I mean that's the reason why we got that 70% literally. And I think I'm gonna give that to that. I don't really see any strength coming for the EU this week so far. But when the market opened on Sunday, I mean this evening, because today this video is recorded on Sunday. And then the market open today, we're gonna have to see how this goes in general. So I think that's more like everything I have on that note. Now let's check the economic calendar. Yes, on Monday we have bank holidays as expected. All right, and then on Tuesday we have the core durable goods in the United States, and then we have the consumer confidence also coming on Tuesday. So none of these are actually high impact data, but you want to pay close attention to them, especially the core durable goods and the durable other months, okay, in the United States. On Wednesday, we have the CPI, the annual CPI, okay, the CPI year on year in Australia coming in hot. It's actually expected to drop from 2.4% to 2.3%, which is fair enough. And then in New Zealand, we have the bank rate in New Zealand coming up. I was actually expecting them not to cut any rates, but we saw that Australian dollar, Reserve Bank of Australia cut their cash rate by 25 basis points last week. Okay, so maybe, now we are seeing that New Zealand is also planning to cut the same thing, cut their rate, and that might possibly drop the momentum in New Zealand, the strength of New Zealand dollar. That might literally drop it, but we have to wait to see how that goes. But they are expected, or they are forecasting to cut it by 25 basis points, which is the bare minimum anyways. And Wednesday, we have the FOMC member, Wallace speech, Reserve Bank of New Zealand press conference, definitely that's going to follow. And we have the FOMC meeting minutes on Wednesday by 7 p.m. So you want to pay close attention to that. And after that, that's more like everything we have as a top data. Yeah, we also have unemployment claim, the initial jobless claim in the US on Thursday. On Thursday we have just bank holiday in Europe and in Switzerland. And that's more like it. On Friday, anything serious? We have the retail sales in Australia. We have the core CPI year on year in Japan. Okay, the Tokyo core CPI year on year. And then we have Spanish flat CPI. These are not really super interesting to say. What is that? Nothing really. We also have the revised consumer sentiment in the United States on Friday as well. This doesn't really look very decent. I think the biggest news that we have this week is from Reserve Bank of New Zealand, their interest rates decision and statement, whatever. And then I think on Thursday also we have some GDP coming on. Okay, the US dollar quarterly GDP prelim. It's expected to remain the same percent. Okay, negative 0.3%, negative 0.3%. Okay, if this happens to be the same, we might end up seeing a further drop in the price of DXY, okay, as time goes on. But right now, nothing is certain yet, so let's keep a close tab on it. So the data we have is actually on Wednesday and Thursday, okay, literally, Wednesday and Thursday. Those are the time you want to really chill and understand what is happening in the economic calendar, as we explained right now. So aside that, I don't see any other thing super interesting that you need to look into for now. Okay, so quickly, let's take a look at the economic, the top setup on the Edge Finder. So right here, we have pound CHF, we have pound yen, we have pound Aussie, we have USDR, we have Bitcoin. I'm going to talk about Bitcoin also today, a little bit. We have pound CAD, we have pound dollar, we have dollar yen. And then we have Euro Kiwi, we have Euro pound, and we have Australian dollar, New Zealand dollar. Now, I have some trade running. I have Gbpjpy running on the sell trade. I have Nzdjpy, okay, on the sell trade as well. I also have, which other one? I think I have pound yen GJ on the buy trade, okay, it's running quite neatly. Okay, what else do I have? I think these are the three trades I have. I have Aussie CHF also, AUD CHF, okay. I have on a short trade as well, but this is a little bit in a bit of a mess right now, which could actually, I might cut the trade very early on Monday, okay. So that is that. But so far so good. These are the position I have running right now: GJ, Aussie Swiss, Aussie Kiwi, and Euro GBP. And I have some trade recommendation which I will be explaining as time goes on. But for now, these are so some of my trade recommendations are also here. I have dollar yen, I have pound yen. Am I recommending pound yen? Definitely not. Also, I have US30. Let me add it to the mix. I have US30 as one of my top trade recommendation. Okay, so that is also that. Yes, you can see Dow Jones right here. US30 is still reading very bullish, score of 10. We have what else? We have pound CHF also very bullish, score of 9. We have pound yen bullish, score of 8. We have Bitcoin bullish, score of 7. We have pound CAD bullish, score of 6. We have dollar yen bullish, score of 5. We have Euro Kiwi bearish, score of -5. Aussie Kiwi also score of -5 bearish. And then we have Euro GBP with a -10 score and is reading very bearish. And don't forget, I'm holding AUD NZD short, Euro GBP short, and pound yen. Here's it, pound yen short. Those are the trades I'm holding right now. Although I have some trade recommendation like Dow, I have it on one of my trade recommendation. Pound CHF is one of my trade recommendation as well. I also have pound Aussie. Here is one of my trade recommendation, which I'll be sharing later. Dollar yen, yeah, we're gonna consider dollar yen also. But if you want access to that trade setup, you want the entry plan per se. Okay, you have to join my free Telegram channel, or if you want a more exclusive entry plan, like this is where you put a stop loss, this is where you do this. You might want to give me a message, a direct message, and then we can discuss how that is going to play out. So that said, let's jump straight into the chart properly. So here we are. This is Australian dollar Kiwi, New Zealand, Australian dollar, New Zealand dollar. All right, so it has an Aussie Kiwi. I have a short trade that's been running since I think Wednesday last week, I believe. Yeah, right there. It went up a little bit. Now it came back down on Friday. That's where it closed. I'm still holding on to this trade. It's a very, and I would like to see it come actually to the downside right here. All right. However, this is a very ranging pair. Okay, it's been ranging for a very long time. We have a wild part of the range. We have a more sinister, or let me say, a smaller part of the range. All right. I'm going to be taking a look at the 2015 region anyway. This is from 2014, excuse me, and this is 2025 this year. So that's like 10 years ago. Okay, a decade of data. You can see we have a top right here. We have a bottom. We have a bottom. We have a top. So far so good. We've seen two tops. Okay, we have one and two tops. Right here we have one and two bottom. However, from 2023, which is 2 years ago, the market seems to be very tight right there. Okay, so right now we've seen how many tops in this very tight range. Okay, excuse me for that. In this very tight range on Aussie Kiwi, we've seen this very tight range right here. We've seen 1, 2, 3, and 4. We've seen 4 tops. All right there. And how many bottom have we seen? We've seen 1 right here, the bottom right here. Okay, however, we have another bottom right here, which seems like 1 and 2. That we've seen 2 tops. So 2 bottoms, excuse me. So in my personal opinion, I believe, all right, this is my belief right now, okay? And it's my personal opinion, don't forget. It doesn't have to be yours, okay? So in my personal opinion, I believe we would likely see a retest of this particular bottom right here, okay? Maybe the third time, okay? The third time. Don't forget, when I was checking earlier, I said we have like multiple bottoms right at the bottom here. Okay, we have 1, we have 2, maybe we're going to get the third one right here. Simple stuff. But at the top here, we have multiple resistances, okay, that have been mitigated a couple of times. So it is just normal for us to look for the bottom to also come down, especially when you're trading in a range bound. Don't forget, this is a decade-long, 10 years, decade-long range pair, okay, or range bound trade. So you don't have to go crazy about it. It's not a trending pair, it's a range bound pair. So that is that on Aussie Kiwi. I'm just looking to short it. I'm actually holding it. However, if I get tapped out at the top here, I mean, I'm definitely not going to take a buy because it's awfully close to the top, to the very rare end, to the end of the top, to the rare end of the top. All right. However, at the bottom, yeah, it looks like there is more room at the bottom to come to. Right. And considering the fact that we have so many resistances that have been tested, retested, and getting rebounded, so it's just normal. Don't forget, I took a shot right here sometimes before, so it's just normal to see the market come down here. That is what I'm trying to explain to you. But take this with a grain of salt. If you're interested, you can still join. It's still very young on Monday. All right. But just make sure you stay very, very alert on this part. And don't forget, all of my trade setup are they are swing trading setup. They are not a scalping setup. Okay, you can watch my video and make a decision based on it. If you're a day trader, yeah, these videos are still very important, are still very educational, and you can also take some of this trade. Don't forget also apply risk management. This is not a financial advice, the whole thing. Okay, but if you're a day trader, yes, you can look into it. Okay, as far as your stop loss is very decent, probably around there or around there. Okay, anything above here is a very good place to put a stop loss. If you're taking a shot below, down here, all right. Right here is good for stop loss. Right here is also good for stop loss. All right. So that is that on that. However, if you're a scalper, please do not try to pick all the trades. Okay, but you can still. I mean, I'm just recommending for a swing trader and day trader, in my personal opinion. Anyways. So Gbpjpy, yes, this one actually looks very good, and I share it on my Signal page, on my on my which other page is that mentorship group, and they're all doing very well right now. This is actually the ultimate target right at the bottom here, around that 0.5 to 100. Okay, that is my ultimate target. I mean my TP, but I would like to take some profits right here, which would be like maybe 1.8%, considering where my stop loss is, and right at the bottom here we give me maybe 2.8% or maybe 3% RR on this trade. Let me check. No, it's more than 3%. It's 3.35%, which is very good. If I get this, that would be a very good one. But for now, I'm holding this trade. Looks very good. Looks quite decent. I would like to see how it goes. Don't forget again, Gbpjpy, another ranging pair. Okay, another ranging pair. Since when has this one been ranging? Since 2017, right here. Okay, right around here. It's been ranging. We see we have top, we have bottom, 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 we have top. Now we are getting the bottom right here. Okay, so you can see that the market also kind of like streamed down as it goes. Okay, we're seeing some top, we're not seeing we're seeing some top, we're not seeing the bottom properly. The bottom just keep staying at this region right here. Another one at 0.5200. That region seems to be the ultimate support, So the plan is just to see if we can get the market to come back down to this particular region right here. Again, 0.8, sorry, 0.8200, not 5200. 0.8200 right there. That is the ultimate target for me on this particular pair. So let's see if this is going to work out. And don't forget, when I was talking earlier, I showed us the surprise mirror as far as Euro is concerned. And yeah, before that actually loads up, don't forget we have Gbpjpy reading very great, very bearish on Edge Finder right here with a negative 10 score. That is quite significant, all right? Very, very bearish right there. That's a good one. And yeah, on the economic surprise meter, still loading up. I will bring it back later. But if you watch this video from the very beginning, and don't forget, the full version of this video is on YouTube. Okay, don't forget that, please. You can quickly catch up with it if you're watching this on TikTok. So this is what I'm talking about on Euro. You can see right here we have 17% strength in Euro. This is very, very weak. Okay, this is extremely weakness. Okay, the only pair that actually seems like that is South African rand, also with 17%. But as time goes on, we're going to see how this all goes moving forward. But I'm pretty much bearish on Euro anyways. Pound yen also. Pound yen, what do we have on pound yen? Pound yen, come on, let's go. So pound yen, I'm looking for, I took a buy opportunity and I've been taking this buy trade since last week. Took a buy here, I took another fresh buy at the bottom here. Now, it seems like the market is about to move up, all right? Considering the couple of candles, a couple of daily candles that we saw on Wednesday. This is Wednesday, this is Thursday, and this is Friday. You can see all those candles, right? They had a very big week on the downside right here. The same thing happened right here as well. You can see every time pound yen is about to go up, it creates all this kind of like pin bar, okay, towards the kind of pin bar that pointed that you should start anticipating for a buy opportunity. Okay, the same thing happening right here before all of this right went up. The same thing happening right here before the market jump up. So we are saying the same thing, repeating itself right around that place, which I just circled right here. All right. So we might end up seeing a break move, and then the market will just fly from there. So if you're not in this trade and you're looking to join, that is good. But just map out the eye of the Wednesday. Don't forget, this is Wednesday candle, this is Thursday's candle, and this is Friday candle. The eye of the Wednesday candle, map it out like that way. If you see a 4-hour candle that closes above it, that is your signal for buy. All right, buy it, put your stop loss slightly below here, and target the top right here, which is 199.815. Right, you can target the top right there. That should give you a roughly around, maybe 1:3% risk to reward, okay, based on where you put the stop loss. So that is that on pound JPY. I'm holding this trade. These are the trade I'm currently holding. Don't forget Aussie Kiwi, Euro Pound, and Pound Yen. Those three trades I'm currently trading them. I have them open. So now let's talk about my trade recommendation before I wrap up for the day. The first one I'll be talking about is Pound CHF. Pound CHF has, in a very long time, it has actually proven itself to be a significant ally. All right, and a pair that is worthy of looking into. I'm not a big fan of this particular pair per se, but if you look at how since they come down to this 1.0400, okay, so it came down to this region right here, which seems to be a very significant region. Okay, you can see it has made a very move to the upside. Okay, forming higher high, higher low, high, low, high, and low. And this particular low right here came all the way to 50% Fibonacci, which is something that I love to see. Now, before you can enter the trade, okay, if you want to join Pound CHF, before you can take that, make sure this eye is taken out first. Okay, make sure this eye, they are all taken out. Wait for candle that close slightly above this region right here. Then look your buy, put the stop loss slightly below here, and target the top right here. Don't forget, this is a swing trading plan or a day trading plan, as the case may be. But I would recommend it to be a swing trading plan so you can hold it for as long as possible. So that is my trade recommendation on Pound CHF. Keep a close eye on it. Also, this is a ranging pair, don't forget. Okay, this is a ranging pair for a very long time since, I believe, 2022. Yeah, right here, 2022. We've seen 1, 2, 3. These are bottom, right? 1, 2, 3. And we've seen like 1, 2, more like 1 and 2 tops. Okay, it's not super bad, but I guess if we have 1, 2, 3 bottom, it is just ideal for us to expect, the third top as well before the market now ends up coming down. Don't forget, every time It ranges and then it drops. Okay, you check the weekly band, you will see what I'm saying very, very carefully. All right, or the weekly band. Oh, excuse me. So that is the plan on pound CHF. Please look to buy. All right. Don't forget. Also, it's one of the pairs that is recommended on Edge Finder, and it's also reading very bullish, in my opinion. Okay, it's reading very bullish. Where is it again? Pound CHF, very bullish. Right here, the score of 9, right there. So that is another thing that you can use as a backup or as a confluence for you to enter the trade. Now, the next trade setup I would recommend is USDJPY. Okay, and personally, I want to buy USDJPY. Don't forget. Now, before we talk about USDJPY, let's talk about DXY quickly. Okay, so now on DXY, what do we have here? We've seen DXY actually form a very, very deteriorating momentum. Okay, since the beginning of the year 2025, we've seen DXY actually drops down. Okay, it drops down drastically. Now, I'm telling you to buy USDJPY, dollar yen. Don't forget, number one, we have 46% strength in the price of as a currency. You know, economically, dollar is strong in this proportion, in this percentage. And this is USD, and this is JPY. JPY, dollar yen. I mean, yen itself is strong with 36 to 38%. Okay, this is the strength. So normally we should expect dollar to overpower yen, right? That is normal. But so far so good. We've not really seen any economic indicator or any monetary policy statement that kind of instill that confidence in traders to buy dollar. Okay, and that's why we are seeing the market drops down here, because nobody's actually buying dollar right now. Even the Feds, okay, excuse me, the institutions, what are they doing with the United States dollar? Let's check it. What is happening with the United States dollar? Right here, they have 2,000 new longs and almost 2,000 new short contract added as well. So nobody is jumping into dollar. Nobody is rushing into it at all. Everybody is taking a calculative risk, calculative decision. That's what everybody is making. And you can see the net position as well. Even though the short contract is way bigger than the long contract right now. And if the institution is doing this, what do you want the normal average retail trader should do? Of course, you should look for short as well, all right, on DXY. So this is another reason why I'm still hopefully careful. I mean, I'm hopefully bearish on the dollar, but at the same time, I'm very, very cautious. I don't want to rush into it. I don't want to force the pair. I don't want to force anything on the United States dollar. Okay, I'm not sure it is ready for that bullish momentum that we all wanted. Never forget also, this also looks to be like a ranging pair for a while. All right, it's been ranging. It has stayed at the top here for over 3 years right now. This is 2022. Okay, we have the high, and then the market just slowly deteriorates right inside this box since 2023, July 2022. Excuse me. Okay, you can see right in this small tiny box right here. It just stayed right here. Okay, since July 2022, right here. Let's just say 2023, literally. Okay, up until now, we've seen dollar index actually range inside this box. Okay, now two things will probably happen. Let me make this bigger a little bit so we can see it clearly. So two things will literally happen moving forward. Number one, we can get dollar index to keep reducing in momentum and come all the way back to 2015 low at $88. Okay, at 88 right there. Okay, we could get that. Secondly, we can see dollar actually gain some momentum, move to the upside, pull back, and then probably approach 105 region. All right, that is also very possible. But before we can see something like this, first off, we need to see the economy, the United States economy gaining some traction, some interesting traction. This is the US economic heat map. It's loading up. Let's give it a minute. Okay, we need to see the Fed coming with some very good decisions. We need to see the inflation, the interest rates coming to terms with what the market is forecasted. We've been expecting the rate cut for a while now. It's not coming. So we need to see some very, very good approach or good layout that the Fed has for anybody to really trust the dollar index again and start buying dollar. Because right now, I won't touch dollar with an inch long stick for nothing when it comes to buying it. Okay, although I'm not heavily shorting it because the economy doesn't look super weak. Okay, in my opinion, it's still 46%, 46.7, averagely good. All right, but it's not super weak yet. And the stock market is also 53.85%, decently strong. All right, but at the same time, we have inflation slowing down. All right, inflation is cooling in the United States very well. Okay, the retail sales also gained some traction last week. All right, however, the unemployment rates keep booming up gradually. Wage growth also keeps reducing slowly, which is not very good. And then we have the job opening, the IDP. Those ones are not looking very tidy as well. And lastly, we have the quarterly GDP. Don't forget, we have another one coming this week, Thursday, the quarterly GDP in the United States. So you want to pay close attention to that. Although that's actually been forecasted to come at 0.3%, which definitely has been priced in already. And that's why we have that bearish trajectory in the United States dollar. But in my personal opinion, all right, before I can start seeing before I can begin to trust the dollar back, I want to see the unemployment rate come probably down to 4.0. Okay, I want to see the wage growth jump to like 4% thereabout. All right, I want to see inflation probably get lowered more. I want to see the Fed cutting rates. I want to see the labor market booming crazily as well. It might not be crazy, it might just be a moderate boom. All right, and I want to see the manufacturing PMI also gain a bigger traction above 50. All right, the GDP also, I want to see it at least 0.8%. Okay, then I can gladly sit back and then start buying dollar. All right, anything outside of that, I would also gladly sit down and watch from afar. Okay, and watch from afar as far as dollar is concerned. So that is where I stand right now. To plan, we can see dollar actually deteriorate further and drop down to 89 region, okay, which is 2015 low. Or we might see it actually gain some momentum and start moving towards the 105 region, because that is where I see it. Right, that's more like where I can see it actually holding off before we can anticipate for any further move. Okay, is that 103 catches and then we see dollar drop further, or 105 catches it and we see dollar drop further? Anything above 105, excuse me for that, anything above 105 right here, I mean, if dollar break above 105, we'll likely see it come back to 114 basically. Okay, because that would be a lot of strength economically. Okay, that would be what a lot of economic strength coming back to the United States dollar to make all this happen. All right, I'm sorry I'm spending so much on the United States dollar, but it deserves it, because it's a key factor in the financial market. But anything happens to the dollar, literally every G7 currency will be affected, so to speak. So we just have to understand. Now, coming back to the United States dollar, Japanese yen. So what is the plan? The plan is for me to still look for that opportunity. Why? Because yen is awfully weak compared to the dollar. Okay, yen is what? Yen is awfully weak compared to the dollar. So I'm definitely not going to sell dollar against Japanese yen. It is not impossible. It's not possible. I would rather just sit back and then not trade it at all than start selling dollar yen right now. Okay, economically, it doesn't make sense to me. All right, so I would rather just sit back. Although if I get a very good opportunity to buy, yeah, I would definitely give that shot. But it's going to be a long shot. Okay, it's going to be a long shot. And why do I say it's going to be a long shot? Number one, I would like to see this particular candle getting taken out first up. Okay, I would like to see the market making a push to the upside right here. Why? Because when we take this, if we take this chart to the daily time, to the 1 hour time frame, we'll be able to get a very nice channel. Let me see if I can make that happen. Let's start with the 4 hour time frame. Okay, let me draw one or two things on the chart, especially this trend line. Let's have a trend line like this right here. I just want to touch the very edge, okay, of this, and I'm going to draw just a bearish trend line. So let's take it to the 1 hour time frame right now. That would make more sense. Now, you see what I'm saying now? Okay, you see what I'm saying now? So if I'm going to buy dollar yen, okay, first up, we have some very good structure right here. We have a low here, okay, that's number one, and then we have a high right here. A key zone is right here. We have a key zone here on dollar yen. So two setup for buy opportunity. Number one, I want to see the market break above here, break this particular low. Okay, we have a structure right here, right? We have a support, we have resistance, a dynamic support and resistance. Don't forget, resistance, support, resistance, support, resistance, support, resistance, support, resistance, support, resistance again. Then we have a support right here, which was eventually just resistance. So you have to understand the way the market structure works. Okay, so if the market break above this newly used resistance, break above it to the upside like this, now pull back to retesting it, and now using it as another support again right here. That is the first step. I might start looking for buy opportunity right here. That's number one. The second step for me to buy, which will be more conservative, will be if the market now make a very nice jump to the upside like this, and then use this region as support again. Because alternatively, by the time it break above here, if you're using this region as resistance region, okay, now if you break above it again and then pulling back to use as support, that will give me my three-wave pattern, which is higher high, higher low, and higher high. Three-wave pattern. Once I get that three-wave pattern, that is the start of me looking for buy opportunity right around there, and then I will target 150 region. Okay, this particular region right here ain't got nothing on me. I will be looking for it to get broken to the upside, and I'll be targeting 150 region for sure. Okay, on USDJPY. So that is the breakdown on this. Is something I will give if you're on my signal page. Okay, but I figure let me just give it the take right now. So when I say I'm looking for buy opportunity, it doesn't mean when it comes down to this right here, this particular region, I will buy immediately. I might not. I might, but I might not. If I'm going to share a signal, and it's going to play out the way I've explained it earlier. That's how I'm going to look for that trade. That's how I'm going to buy it. Anything outside of that, I won't be buying. But if I want to take it aggressively, definitely I will take a buy right. The moment the market open on Sunday, I take a buy. Straight up. All right. For conservative entry, look for break, pull back, take a buy, break, pull back, right? Take another buy right here. And then on it goes. Don't forget, this region I said I'm definitely counting on it to get broken crazily, like violently. I need to get broken violently. The way this region was broken, all right, I needed to get broken violently again, right here. So that's my plan on USDJPY. Trade recommendation. If you like it, you might look into it. If you don't, then you can sit back and wait for the next, which is going to be Nzdjpy. I'm also looking for buy opportunity on Nzdjpy. Now, the reason why I'm looking for buy on Nzdjpy is very simple. Number one, we have solid higher highs and higher lows as well. All right. Although this is the last low we had, but it was broken. All right. It was broken aggressively as well. So we have another low right here, which was not broken yet. So if we get a break above here, pull back, I will look to buy. Now, you may ask me why. The reason again is what? The economy. Let me bring it back for you. So this is Nzdjpy right here. We have NZD with a strength of what? 88%. We have Japanese yen with a strength of 33%. The difference is clear. Kiwi is stronger than yen. Now, don't forget, in the economic calendar earlier, on Wednesday, okay, the Reserve Bank of New Zealand is expected to do what? To cut interest rate by 25 basis points, or let's say 0.25%. Okay, so that could be taken as the dovish data, or it might help to pump the Kiwi. I'm not sure how that's going to affect the market just yet, but in my heart of hearts, I believe the fact that the Fed, the Reserve Bank of New Zealand, which are the Fed in New Zealand per se, okay, we've already made this public. That means it has already been priced. If you understand what pricing in means, all right, it's been priced in. So maybe if the data came just like this, you might see a very tiny drop that will eventually go corrected later. Okay, it's already been priced in. Unless they cut maybe 0.5%, which is going to be like 50 basis points. Come on, 0.5% or 50 basis points, which is roughly not possible right now. All right. But if they cut 0.5% or 50 basis points, it's still the same thing. I'm just saying. All right. That means we might get a much bigger drop in the price of Kiwi. Anything outside of that, if they cut 25 basis points, yeah, it's not going to be effective as much. Or even if they said they are not going to cut, then you're going to see Kiwi actually fly crazily to the upside. Crazily. So that is that on that. You might be concerned that, yeah, it's 88% right now, but they said they are going to cut with it's already been priced in. Forget about that. It's been priced in. The only thing that has not been priced in is if there's a surprise. If they decide not to cut, or they cut much bigger than 25 basis points, then that's going to be a bomb. Anything outside of that, if they said they're going to cut 25 basis points, and they end up cutting 25 basis points, the rest is history. All right, it's already been priced in my opinion. Don't forget, my opinion. So now, what is the entry going to be like? A better entry on this one will be shared on my group for sure. But you can see the structure right here. My trend line is always very flimsy. All right, don't trust my trend line for nothing, because I have a reason why they're all there. They are playing a very structural role in this whole thing, not a technical role, more like a structural role. Okay, I don't want them to be broken, but once they are broken, that's why I put them at the very edge. I'm not drawing it to the way it's supposed to be drawn. All right, I'm drawing them in a way that they capture the structure of the market. All right, the best way possible to make sure nothing, despite the whole craziness in the market, it's still aligned with the trend line. Okay, but the moment they are broken, I know that if the violent break, then I want to see the support of the resistance getting destroyed, then we know how to now tackle the rest. Okay, that is how I use my trend line. Okay, so now the plan is, we've seen this crazy dump in the price of Nzdjpy that happened from the 14th of May up until last week on the 22nd. And slowly we've seen the market actually getting a little bit of a pushback. Okay, yen was crazily bullish this last 2 weeks, and it did not favor me. Yeah, I took a buy right here, which actually makes sense. But since then, I've been buying yen here. I think I took a first buy right here. It didn't play out well, took me out. I took another buy right here. It didn't play out, took me out also. I've actually taken some losses on Nzdjpy. But mind you, this year alone, I've taken some very good profit on Nzdjpy as well. So it all mixed together. I'm used to it. It's not new to me. I'm still going to trade Nzdjpy for sure. I'm still very bullish on it. So that's just by the way. Moving on. So Nzdjpy, in my opinion, we've seen that it has broken this my weird trend line. I'm calling it weird, like I said earlier. It's not like the best thing in my system. It's just a way I kind of track the structure of the market, if that makes sense to you. Okay, so the plan is to see if it breaks above here, nice and easy. Don't forget we have multiple supports right here. And then it's currently using that resistance, which is very cool, right? The moment the resistance is broken to the upside, and now we're seeing it use, okay, we're watching it use as support, which turned this place to a what? A key zone. I love that. I'm going to smash a very nice buy all the way to the upside. And I'm hoping that this particular region also is violently broken. All right. That's another thing. I hope the market violently break it. But even if it is not broken violently, let me contribute that. Okay, if it's not broken violently, at least if I take a buy right there, all the way from 85.50, okay, and then the market right all the way to 88 or even 86.50 right here, that is roughly around 100 pips, so to speak, or 1,000 pips, excuse me. Okay, that is a good one, right? That's a good one in my personal opinion. I think 1,000 pips, I'm not sure about that, but let's see if I can. Let's see if I can measure that. Yeah, that's roughly, I think it's 100 pips, right? Right. Yeah, it's 100 and something pips. Yeah, it's more like 100 pips. That is fair enough for me, okay? That is fair enough for me. But however, I would really love to see it getting taken out, okay? I would love to see it getting violently destroyed. And then maybe I'll be targeting 90 region, okay? Or even way higher, all right, as time goes on. But let's start from the beginning. Right here, break above, we pull back. Yeah, we target this area first. If it tends to be a bully, and then the market got rejected, yeah, I will get trail out maybe at 50 pips or maybe 30 or 40 pips. That's fair enough. Okay, 40 pips is good money. Okay, 40 pips is good money for swing, for day trader. For swing, it might not be that much of a good money, but for day trader, for scalpers, yeah, that's a good money. All right. But if the market comes back here, pull back, I might hold on to the trade, and I will still hope this particular region get destroyed violently because of what? Lastly, because there is no room at the top. Okay, more than enough room at the top. You can see right here. Just take a buy. There is so much room right here. So much room for the market to run all the way to 92.50. That will be blown off. All right. So that's my plan on Nzdjpy. Okay. Don't forget, we've already talked about pound CHF, a trade recommendation. Pound CHF. We talked about USDJPY. Okay. We've talked about Nzdjpy. Now we're going to talk about US30. So these are my 3 trade recommendations. Please don't forget them. All right. There might be some very good money that can be made this coming week and the week after that. So you might want to really pay close attention to all of this. Okay. And make sure you make decent profit from it. All right. So now let's go to the US30, which is going to be the last one I'm going to discuss today. US30. Then don't forget, I'm going to talk about Bitcoin for a minute or two, and then we're just going to round the whole thing off. Okay. And yes, don't forget, you can watch, if you're watching this video on LinkedIn, on TikTok, on IG, the full video, the full version of this video is posted on my YouTube channel. So you want to quickly go there and watch you want to go and watch the video right there in its entirety. These are very long videos, around 35-40 minutes. So you really don't want to miss out on this one. So that said, on US30 right here, I think we have a very good shot at buying. Don't forget, I said I have a buy opportunity right here. We can take a buy. Last week I was talking about US30. I said we can take a buy right here, or we can wait for it to come down to this region. Okay, now you can take a buy here. It's not up to 30. I'm not sure this is even 38.6% Fibonacci. Let me see if I can put that there. 38.6% Fibonacci. Yeah, it's not up to that place, right? Yeah, it is not. This is 38.6, 38.2 Fibonacci. All right. Maybe we're gonna get a drop further next week, then you can look for buy, or maybe just wait for it to come to 50% Fibonacci. You can look for buy opportunity on this particular pair, US30. Okay, might be a very good one, but if it doesn't make sense to you, you might as well just leave it alone. All right, just leave it alone. But don't forget the other pair that we've talked about today. We've talked about the let me bring it up again. The pair that we've talked about. Yes, we've talked about pound CHF, we've talked about the dollar yen, we've talked about Kiwi yen, and then we've talked about US30. At least one of these 4 pairs, you can join them and make a decent return for yourself. All right. So lastly, on Bitcoin, what do we have on Bitcoin before we go? Bitcoin have broken the all-time high this 2025 all-time high. We got an all-time high in January. Yeah. January, February. We got an all-time high in January, and then we got a fresh new one in February, which was around 109 region. Now we got a fresh new one in May, which was around $112,000, $112,000K, which is very good. Okay. Now the first part is, if we get a retest of this region right here, which is 102, don't forget, we get a retest of this 102, and the market gets some very good demand right here. Okay, you got some very good demand. There are some people buying at this bottom right here. We might see Bitcoin fly all the way up to 120K potentially. Outside of that, if the market decided to fall further and break below this 102K region, we might get it to drop all the way back to 100K, and we might get it back to around the 91K before we can get another demand for Bitcoin. All right. So if I'm going to buy Bitcoin now, wait for it at maybe 91K or maybe that 100K region for me to add on to my buy opportunity or my buy position on Bitcoin. Don't forget, it's a spot position. Okay, they are not leverage trade, or neither are they CFD. Okay, they are spot trade. Okay, I don't play with leverage when it comes to the crypto market. The forex leverage is enough for me to deal with. All right, and extremely, if it drops all the way down to 71, 73K with your, yeah, you might want to chip, you might want to chip in very hardly. With a leverage trader, if you're a leverage trader, you can look for a short right here, a sell trade, and then you want to look for a buy trade on this one right there. So this is a very long video. I hope you enjoy every bit of it. I'm going to see you in the next one. Please do have a fabulous day ahead. All right, I'll see you in the next one. Have a great day. Bye for now.